Good morning, everyone. This is Toni Turner, and welcome to the market now as of about 10:30 a.m. Eastern on Friday, March 18th. Well, Wall Street is higher so far today, pushing the S&P 500 into positive territory for 2016 as the Fed's tempered view on interest rates, a weakened dollar, and rising oil prices have fueled investors' risk appetite. The Dow Jones Industrial Average has extended gains for 2016, helped by a 2% increase in Goldman Sachs. Volumes are slightly higher than usual today because of quadruple witching, the expiration of options on stocks and indexes, as well as futures on indexes and stocks. Crude oil has rebounded to fresh 2016 highs on strong seasonal demand, and hopes that major oil producers will reach a deal to freeze output. Now let's look at three charts that could give us some input into the week to come. First of all, we're looking at a chart of the S&P 500 SPDR, symbol SPY. As you all know, this is the tracking stock or the ETF that closely follows our benchmark index, the S&P 500. As I captured this chart today, the SPY was trading at $204.40, which is about 20.44 on the S&P 500 itself. As you can see, it's now trading, and it's bullish, above the black line, the 200-day moving average, also at quite a premium to its 50-day moving average, the black line, and its 20-day moving average, the red line. Now we know that the SPY came down from the open here in January at about 203, I believe, down to 181 in January and February, or about 1810 on the S&P 500 itself. It has recently, or since then I should say, climbed back up in one heck of an impressive uptrend, back up to this 204 level, which is a 13% climb. Now, if we think of this stock prices like a rubber band, we could say that this rubber band is getting stretched pretty tight. We still have resistance in the form of potential supply from the last quarter in 2015. It still has to climb through that, still has to deal with that potential supply there. It's done really, really well. If we look down, however, we see that the 14-day RSI is now about 70 on its scale. 70 is considered to be the overbought zones for whatever asset you're charting. And this, of course, is the SPY. So we're climbing into pretty high territory here. What I don't want to do in the next week is I don't want to buy high and end up selling low. In fact, that's the exact opposite of what I want to do. And again, this rubber band, the SPY, is getting stretched pretty tight. So going into any new positions next week, depending on, of course, what it is, could dictate smaller share size and certainly firmer stops. Okay, our next chart is the PowerShares QQQ. This is the ETF that closely follows our NASDAQ 100 index. I wanted to bring you up to date on the Qs because it has a different chart. Now, these are the big momentum stocks in the technology world: Apple, Microsoft, Amazon, Netflix, Google, Intel. And as we can see, it is a little different chart here. The PowerShares Qs definitely led, were very, very strong in 2015. Excuse me, but then in the beginning of 2016, just like the SPY, this index headed quite a bit lower, came down to just about, let me see my low here, came down to a February low of $94.84. Now it's 107.10 when I captured this chart, and that's a 12% move. So that's been very sweet as well. As you can see, the Qs are trading above their 20-day moving average, their 50-day, but they haven't, unlike the SPY, they have not made it up yet to cross over their 200-day moving average. So we've got to see if the Qs here can come up, cross above, call it 108, and then move up into this area of more supply and resistance? And can these big tech stocks absorb this supply, this resistance, when they move higher? That's going to be the trick going into next week. Now, if the Qs cannot get above its 200-day moving average at, we'll call it 108, then they may have to retrace here a little bit down to support potentially at 104 or even down to 103. The RSI here is not as overbought as it is on the SPY. We do see the MACD is positive over the 0 line. So it just depends on what happens in the coming week to see if the Qs have the strength, have the momentum to rise higher, or if they're going to need to pull back here a little bit again to maybe 104, 103. I'd almost prefer that. I'd almost prefer a pullback for the SPY so it could gather enough momentum to start higher again. Remember, the higher these rubber bands get stretched, the harder they snap when they come back in. Our final chart today is the S&P Spider Regional Banking ETF, symbol KRE. I've been watching this KRE. It is not overbought as some of the other industry groups. Of course, it's in the financial sector. The top components of the KRE are BB&T, PNC Financial, M&T Bank, Huntington Bank Shares, SunTrust, KeyCorp. You've heard of these. Okay, this is a pretty decent pattern here. The Spider KRE did come down here, did come down and make a low on February 11th right here of $32.63. Since then, it's made a bit, and a lot of indexes has, it's made a bit of an inverse head and shoulders here. It's come up, moved above that resistance line, finally moved above its 50-day moving average. I like that. It's now above its 20-day, which just crossed over the 50-day. We have the RSI here, not overbought yet, just above 50, trending higher, and the MACD is kind of moving sideways here, but it is above the 0 line. It's moving sideways because the KRE is consolidating. I like this pattern where the KRE came in 2 times, 1, 2, kind of making a handle here and testing this little low right here, calling it support now. When I captured the chart, the KRE was trading at $38.76. I'm wondering here in the next week if the KRE could start gaining strength. It has been a little neglected. See if it can start gaining strength here and potentially move higher. Some of these banks have been involved in oil trades, and as oil moves higher, that's going to give some of these regional banks, especially in areas like Texas, probably give them a little pop up. So I don't want this stock below 36.75, but if it starts moving, or this ETF below 36.75, but again, if it breaks out here and starts to move up toward 39, then potentially it could move back toward its 200-day moving average at 41 and higher. Now we'll go on to this coming week's economic reports. But first, please join us for Toni's Market Club this coming Monday online from 4:30 to 6 p.m. Eastern. We'll talk about which side of the market to trade, have a mini trading lesson, and I'll give you stocks and ETFs that may become ripe for high potential trades. This is a low-priced, high-value opportunity to learn more about the market, become a smarter trader, and make more money. So please join us. For those who cannot attend our live session, no problem. The recording of our session is available to all of our members a few minutes after the session ends. And now, this week's economic reports. We always have a week every month that's very low on economic reports, thankfully, and this week is it. Monday, we have existing home sales, nothing much on Tuesday. Wednesday, we have new home sales and crude inventories. Thursday, we have durable orders and weekly jobless claims, and not much on the economic front on Friday, but I'm sure there will be quite a bit of news around the globe to keep us entertained. Again, join us for Toni's Market Club this coming Monday. Don't miss out on this fantastic opportunity to raise your trading knowledge and your trading profits. Until next week, keep green on your screen. I'm Toni Turner, and this is The Market Now.